good afternoon or good morning in case you're somewhere else. So, we're here to dissect the Union Budget 2022. This is an interesting budget exercise, which is the second one in the middle of a pandemic, and the pandemic is still on. The first one was in February of 2020, and the pandemic started after that. The second one was in the thick of it in 2020, then 2021, and now we are in 2022, second year of pandemic. The reason I'm saying this is one did not quite feel that there was a pandemic all around. If you heard the budget speech today, there were some references to it, but not the kind of reference that maybe someone like me would have liked to see, particularly if I was looking for contingency plans and a thought process which looked at merging the challenges of health and economics or the economy as a whole. So that is a very, very broad sense, but there were a lot of interesting and maybe good things, and some may be good. But as I felt right through the speech, a lot of the budget is about what was unsaid rather than what was said. So, but maybe that's a new way of presenting a budget and a new strategy. So, what we're going to do this evening is we're going to talk to three people from slightly different perspectives and get a sense on what they see from a capital market and an investments point of view, from a finance and personal finance point of view, and finally, and most importantly, perhaps tax, considering that there were some very interesting tax announcements, including the one on crypto, on which I've again picked up some interesting insights in my own conversations with tax experts this evening. But we'll come to that later as this evening progresses, and I progress it will. So let me begin by first welcoming and introducing Saurabh Mukherjea of Marcellus. Saurabh Mukherjea is the founder and CIO of Marcellus Investment Managers, who manages large portfolio schemes, and also a very, very astute market investor and observer and author, most importantly. On that note, what I'm going to do is ask Saurabh a very broad question, which is, what are the hits and misses that you saw or took away or did not take away from the Union Budget 2022? And we'll use that as a sort of start point to get into a conversation. So it's over to you, Saurabh.
Thanks, Govind. Thanks, and it's a privilege being here. I thought this was Finance Minister Sitharaman's most controlled performance to date. She looked to be on top of her game. It was not just that the speech was brief, which it was, but she was very adept at manipulating various fiscal levers. I think three areas where I'll give her particular credit. First, I think there was a lot of apprehension that given the heavy political calendar, the election calendar over the next couple of years, that there will be anti-rich taxes, hikes in CGT, surcharges, and so on. Thankfully, there was none of that. Instead, what you got was a very enlightened announcement that on startups, you'll get 1 more extra year of tax break, and the long-term capital gains tax surcharge on startups is capped at 15%. Now, this is quite a big deal. This is a distinct shift. And if this continues for another budget, I think this is a distinct shift in the way the Indian polity views startups, views rich people, and views taxation of the rich. If you read the history of the Silicon Valley, it's in the late 70s when the first time America cut CGT on startups, right? And a big part of Silicon Valley surge and this startup culture in America took off after capital gains tax was progressively reduced in startups. So quite an interesting point of view there. That going into a heavy election season, no new anti-rich taxes. I think the second area where the FM was aggressive in a way that I've seldom seen other Indian governments be was people like me expected, say, a capex increase of 19-20%, right? Given the fiscal circumstances, I thought 19-20% would be a good number. Instead, we got 35% increase in capex. I honestly don't know whether that can be delivered upon or not, but as an announcement, it's very Keynesian. And again, it marks a departure from this constant fretting about budget deficits and so on. It was almost in your face saying, we will spend the money on 25,000 kilometers on roads, which again sounds very aggressive, but it was a very pronounced point of view that this is the way it will be. We will spend on hard assets. By the way, equally relevant to note, the RevX pullback, the subsidy pullback, which is pretty sharp. She didn't announce it explicitly, but if you look at the numbers, the subsidy pullback is pretty sharp. Again, quite remarkable going into 2 years of heavy elections, a massive subsidy pullback. I think something like 40% subsidy pullback. I think the third area was crypto. both in the speech and then subsequently when she gave TV interviews, she was very clear in saying that only one institution issues currency in India, which is the RBI. Whatever else you're buying is not currency. You can delude yourself it is, but it isn't. And secondly, basically, it's like a casino asset. We will tax it CGT at 30%. And more devastatingly, I think, the 1% TDS. Every time you buy and sell crypto, 1% TDS, which should at least make those people who are sort of punting on crypto like they punt on stocks, pause. So bold move, right? No other country has done this. So usually we are a country where our economists get trained in Western universities, and we look askance at the West for guidance. This is an area where we seem to have taken the lead, not just the 30% CGT, even more interestingly, the 1% TDS, because that will then make it very difficult. Unless you want to be a tax evader, you'll have to report your transactions to the government of India. And once you report your transactions to the government of India, you might have to answer some questions as to where did you get the money which you were punting on crypto. So very intriguing moves there. In terms of misses, it was a little perplexing. I can understand some of the tactical aspects, but I'm still a little perplexed as to why so little visibility on non-tax revenues. Both the numbers are underwhelming, no clarity really on when these assets will be sold, when the LIC IPO will be expedited. Now, where I can understand is as an investor, right? I don't like showing my hand, and perhaps the FM didn't want to show her hand on privatization and IPOs, but that seemed a little underwhelming, given that last year she'd been brave enough to use the P word, privatization, right? It's almost like a swear word in Indian politics. I thought we would see a step forward, especially since the Air India privatization had been expedited, but perplexingly quiet, I thought the FM was. And right at the end, there was those import duties on electronics and capital goods, and that had a feeling of the 80s, right? And the numbers are small. I think it's 7.5% on imported electronics and so on, but it sort of brought back memories of Indians coming from Singapore and Japan with Sony TVs. I don't think we want to go back there, but by and large, I think this was her most assured performance. Solid show, given that it's a COVID budget to go with.
Right. So I think we are approaching this from the point that yes, we expected some real bad news, including, let's say, taxes going up. There's an interesting dichotomy or play here. The one expectation is that taxes would come down, personal income taxes. The other is that it could go up. And what the government is saying is that be happy that it has not gone up, therefore it's a big plus. So, but on the other hand, in the case of something like crypto, obviously, as you said, they've imposed a tax. Now, if we were to take a step back and let's look at the unsaid part of the budget. So one thing which is unsaid is clearly the privatization part. There is no clear, there is a number, but there is no clear target. There is nothing that you can fix responsibility upon and therefore chase. So what is that? How does that appear from a market's perspective?
I'm not so sure the market was going to get, even if she had given visibility, I'm not sure anybody in the market would have set any great store by it, right? Because given what's happened in the last 20, 25 years on this subject, I don't think any of us would have set any great store by it. It's just that it would have given us some sense that the government has got an explicit roadmap. I suppose what we are left to decipher is the smoke signals, that the government is quite happy about their India privatization, and rightfully so. I don't think it's an accident that their India privatization was announced basically in the budget week. And there was explicit mention that the LIC IPO will be expedited. I think beyond that, we'll have to see. See what comes through. My reckoning is there will be heavy duty LIC sales. I think between now and the election, I reckon the government will do 2 tranches of LIC. Remember, once you go public, you have to go all the way down to 75% free float within 3 years of going public. And that will be broadly between now and the election. So I think the government will have 2 bites of the LIC cherry, and perhaps BPCL, Concor, at least one of those big assets will also fructify. But I presume there are good reasons for the government to have held its cards close to their chest on this subject.
Right. So I'm going to come to the economic or the macroeconomic environment which affects the fortunes of companies who you invest in or we all invest in. Now, but before I do that, what's your sense? I mean, is the fact that they did not, let's say, announce something populistic ahead of the elections is a good thing. But even if they had announced something with clearly big elections, provincial legislative elections coming up, would that have upset the markets in any way?
No, I think whether the markets will be upset or not, I'm not so sure. I think one of the most interesting things I took away from the budget was I think this is the first time the government is basically saying we don't think these things have any bearing on elections anyway. And I found that fascinating, right? If implicitly we were told, right, and I don't think it'd be any more direct. Going into UP elections, you're cutting subsidies by 40%.
Narega.
Yeah, exactly, right. And you're doing it, I mean, it's not even that subtle. So I think that was actually, at one level I was quite delighted, because I used to feel, I felt for a long time there is this bizarre sort of connect between politics and economics, which is actually false. I don't think anybody on the streets of Mumbai or Delhi is going to protest if there is if BPCL or Concor gets privatized, or even IDBI.
Right.
It's privatized. So for once, there seems to be the realization was made almost explicit that this is about economics. The budget is about economics, accounting, rather than winning elections. Elections is a different subject. That's almost like a different department of the
Right, right.
government.
And that would be a great conversation, but we don't have time for that. As to what indeed is the government so confident of, which they feel will deliver them the election. So now let me pose a couple of questions around consumption and consumption, purchasing power, and inflation. These are the three things that are hanging over this economy and country, and of course on the many stocks that are doing quite well in the market or have been doing quite well. And yet the budget did not directly touch them either ways, either bare mentions or no reference, or very little done to actually, let's say, increase consumption, unless you're saying that yes, I'm going to invest so much in capex that will trickle down to greater consumption and so on. So anyway, but from your point of view, how are you looking at these macro factors, whether they were mentioned in the budget or not, and how they're going to play out in the next few months?
Let's take it step by step. I think firstly, because of the pounding of the second wave, right, it's relatively clear that there has been a hammering of low-income workers, their buying power, and also small businesses. I think the second wave was particularly brutal, and you can see that in whichever company you get, mention any FMCG company, they're reporting negative sales growth in rural India. You can look at two-wheeler sales, which are down on their knees. Remember, two-wheelers are not impacted by the semiconductor issue, and NREG uptake is elevated, right? So there's clearly a problem there. Now the question is, will this be alleviated? Will this problem be alleviated by throwing money at the subject? And I believe that's not the case. I don't think throwing money at the rural poor will solve the problem. I think the big challenge here is there has been heavy migration out of the cities back to rural India. First wave and second wave drove that. That's resulting in labor shortages in the cities. We are seeing in the companies that we invest in, we are seeing widespread wage inflation in the factories. There is labor shortage even for, say, truck drivers, delivery boys. And therefore, the challenge is you have to bring people back from the villages. The migrants who have returned have to be brought back. Is there any government scheme that will do that? I can't think of one. And therefore, in the absence of that, it isn't obvious to me that just by ramping up RevX, ramping up subsidies, we're going to solve this issue of distress in the villages, in the low income earning segments. So in that regard, I'm glad that the knee-jerk reaction, which would have been throw money at the problem, hasn't taken place, because Govind, had that been done, that would have almost guaranteed stimulated CPI inflation, because we would have thrown money at the poor. They would have tried to use that to buy goods and foodstuffs. That would have ramped up inflation. So ironically, this budget, I don't see it as being inflationary. Neither do I think the budget itself will alleviate the distress of the poor. But I think that isn't too bad a thing, because we need the normalization in the post-COVID world, bring the migrants back to the cities, because otherwise the sorts of wage inflation we are seeing in factories is going to render India uncompetitive over a 2, 3, 4 year period. Govind, you're on mute, Govind.
Sorry, so how does that play out then, Saurabh?
So that's a big question, right? So I think we've reached a stage as a country where we need to give some sort of assurance to the poor, whether it's a health insurance construct, a social security
Right.
construct, because given, I think the first wave was bad enough. We all remember the stories. The second wave was lethal. And I think it's really damaged the confidence of people, migrants who come to cities. We simply haven't seen that return to the city. So how do we bring workers from the countryside to our cities to staff our factories? I don't have an easy answer. It looks like there'll have to be a creation of a social security construct that people can believe in. But hey, it's easy for us to say these things at 9 o'clock on a weekday evening. It's difficult to put a social security construct. The record of the Indian state over the last 30 years in delivering last mile services isn't the greatest, and therefore I think it's a much broader question than the budget. How do you help people in the countryside get up on their feet after the COVID pounding?
Right. Okay. Let me pick up some questions very quickly because I know we are short on time. Shankar Narayan asks, would the introduction of digital currency, would there be an impact on the performance of brick and mortar banks?
Don't think so. I think the world over, brick and mortar banks have stood resolute. We haven't yet met too many people. We haven't met anywhere in the world fintech lenders who lend large sums of money because it's difficult to collect money. If you don't have feet on street, you're not going to collect money, whether you're in the United States of America or in India or in Argentina. And neither have we met too many depositors across the world who deposit their life savings in fintech banks. So fintech is a great idea, but from a lending perspective, from a banking perspective, from a lending perspective, it hasn't gone very far. Where fintech has worked is in the context of things like brokerage, to a lesser extent, asset management. But in the both sides of the balance sheet, from a lender's perspective, fintech is a cool idea, but practically not really particularly relevant at the ground level.
Okay. Suresh Katara asked, is it known which are the chemicals where import duty was reduced? Any losers or beneficiaries that you can think of?
We haven't been able to get to the bottom of that. We've got several specialty chemical companies in our portfolios. I think we'll give them a ring over the course of the week or so.
Yeah, these things do take time to unpack. And while we wait for more questions, Saurabh, you talked about the additional 7.5% duty, which is also on select capital goods. What's your sense on, after almost 30 years, we've started raising tariffs, and we continue to raise tariffs. Not so many this time, but we've continued. So the trend clearly is towards increased protection of at some level or the other. How do you look at that, either philosophically or otherwise?
So, how I look at it, I don't think matters. Who am I? How does it matter how I look at it? What's relatively clear is I think we are increasingly following the more interventionist model that the East Asian countries have followed, where the government, MITI in Japan most memorably, the government will say this incentive for that sector, chosen champions in this sector, this micro intervention to juice up the fortunes of this sector. So we're increasingly gravitating towards an East Asian style model where the government is trying to fine tune specific aspects of the economy. PLI is a step in that direction, as are these very calibrated import duties. Where exactly that does that take us? I don't think I have a clear view on that. There's an enormous amount of literature on whether the East Asian model is the right model for India or not. I don't think tonight is the right time for me to sort of delve into that.
Okay. Uh, there's another question which goes back to that digital currency. Will the Reserve Bank's digital currency impact payment banks and companies like Paytm?
I don't think that's the plan. I think we'll have to wait for the digital currency to emerge. If it emerges in the next 12 months, there'll have to be a blockchain register, I presume. If there is a blockchain register around that, then I'm not so sure that's something we can use to. Can we use that to buy milk and bread at the neighborhood store? I think that's quite some way away. The challenges for the wallets come from a different source altogether. I think UPI. If I was you, if anybody out there is interested in wallets, just look at UPI and look at the existential challenge it poses for many wallets out there.
Right. Okay. I can see Deepak. Sorry. I can see Deepak Shenoy and Girish Vanwari. I mean, guys, do sort of click on your videos and join in because I think we could get this going as a conversation. Here's another question, and this is from Prashant. He says, with inflation on a rising trajectory for the past few months, would the government be prompt in making appropriate changes to small savings interest rates or hold it back, considering the huge capex funding requirement?
It's a subject that I think best left to the government. If you don't have a general election around the corner, why would you hike? Why would you hike savings rates? If people are depositing money with the post office and so on, I can't see why the government would suddenly hike savings rates unless they had some need to please the public. As I said, what was intriguing about the budget was almost an explicit point of view that elections and the budget are not really now on the are not really part of the same conversation.
Right. Okay. Here's another question. Your sort of top headline hits and misses, and what would you have wanted to see for sure, but you didn't? And conversely, what is the one thing that you saw and that you feel is going to be a game changer, or any term
The
that comes
only
close
thing,
to it?
I thought there'll be clarity on is non-tax revenues, which is disinvestment and privatization. As I said, very little clarity on that. Perhaps at one level, no bad thing, given that no point the government making yet another promise, which might or might not fructify. On the positives, lack of anti-rich, taxes, a positive view on startups. Very refreshing to see LTCGT on startups being restrained. A positive announcement on the capex side. Whether they can deliver that sort of capex surge again remains to be seen. But good to see that sort of announcement. Revex pullback alongside that, and lastly the pretty punchy announcements on crypto. It does take some degree of clarity of thought to go after crypto in the way they did, and I think that deserves credit. Overall, as I said, her most assured budget performance, I think, in the 4 years that she's been at the helm of the finance ministry.
And between now and the next budget, that's 2023, how do you see the markets moving to the extent that they could be or might be driven by all of which we spoke
I
about?
think the budget, to be honest, becomes quite irrelevant from a market perspective. I think this is a legacy of our socialist era that we spend all this sort of time discussing it. We are largely a free market economy. These sorts of announcements actually don't matter much in the broader context of the economy. The main thing driving the economy over the next couple of years will be a growth recovery. I don't think the budget has impeded that. The growth recovery shall continue due to a mixture of global forces and local forces and cyclical factors in the wake of COVID. That should be the main theme. Whoever's watching, from your investment perspective, please don't go away and try to sort of game the budget through some very cute strategy that doesn't take you very far in life.
And you see liquidity and all of that staying put, or broadly?
I think foreign investment will come, both the FPI piece and the FDI piece. The FDI piece is coming quite right anyway. The FPI piece should be there once again. The last 3 or 4 weeks, I think, is an aberration, given China's own goals. Every almost weekly basis, China scores own goals. That sets India up quite nicely for 3 or 4 years of solid FPI flows.
Wonderful. On that note, thank you so much, Saurabh, and it was a pleasure speaking to you. And thank you also for staying on for a little longer than you would.